What if the $100,000 sitting in your bank account right now could quietly turn into millions without gambling on risky stocks, timing the market, or working a single extra hour? It's not a fantasy. In fact, some of America's wealthiest investors have been using this exact approach for decades, turning steady investments into massive fortunes. The catch? The longer you wait, the harder it becomes to get there. If you had invested $100K in one of these funds 30 years ago, it could be worth over $2 million today. And today, I'm revealing the 5 Fidelity Index Funds that could set you on the same path if you invest the right way and give your money the time it needs to grow. Fund 1. Fidelity 500 Index Fund. This fund is a monster when it comes to long-term wealth building. It's designed to track the performance of the S&P 500. That's the 500 largest companies in America. Think of names like Apple, Microsoft, Amazon, Johnson & Johnson, and hundreds more. By owning Fidelity 500 Index Fund, you're not just buying one company, you're buying a piece of the American economy itself. The S&P 500 has historically returned about 10% annually over the long term, which means your 100K could double roughly every 7 years if history repeats itself. One of the biggest strengths here is cost. The expense ratio is an insanely low 0.015%, meaning you keep almost all your returns instead of paying them away in fees. And here's the kicker. The companies inside this index are global leaders, constantly innovating and expanding. So your investment grows alongside the biggest forces in the market. This is why so many self-made millionaires call the S&P 500 their core holding. The beauty is that you don't have to manage it. No worrying about which company will win next year. The index automatically adjusts. Companies that fall behind get removed, and the strongest rise to the top. Over decades, that natural selection in the market works heavily in your favor. If you had invested $100K into an S&P 500 fund like FXAIX 30 years ago, it could have grown to over $2 million today, purely by staying invested and reinvesting dividends. This fund is stability, growth, and compounding all rolled into one. Fund 2. Fidelity Total Market Index Fund, FSKAX. While the S&P 500 is powerful, it only covers the largest companies. The Fidelity Total Market Index Fund takes it a step further. It gives you exposure to the entire U.S. stock market. We're talking over 4,000 companies, from giant corporations to small but fast-growing businesses you've probably never heard of. This means you're not just capturing the performance of the big names, but also the explosive growth potential of smaller companies that could become the next big thing. FSKAX is like owning a slice of every single publicly traded U.S. company in one single investment. And just like FXAIX, the expense ratio is incredibly low at 0.015%. Historically, total market funds perform very similarly to the S&P 500 over long periods. But in certain years, small cap and mid cap stocks give you an extra boost. For an investor starting with $100K, this fund can be a diversification powerhouse. You get more variety, more growth angles, and still the same long-term upward trend. Another huge advantage is rebalancing. You don't have to manually buy different stocks to balance risk. The fund does it for you. Imagine capturing the success of future market disruptors, the next Tesla, the next Amazon, before they even join the S&P 500. That's the kind of potential FSKAX brings to the table. Over time, this wider exposure can help smooth out the bumps in your investment journey while still keeping your growth trajectory high. If you want to make your portfolio future-proof, having a total market fund like this is essential. Fund 3. Fidelity Zero Large Cap Index Fund, FNILX. Now, this one is a game changer for one big reason. It has zero fees. Yes, you heard that right. The expense ratio is literally 0.00%. This means every single dollar your investment earns stays with you. FNILX focuses on large-cap U.S. stocks, similar to the S&P 500, but without following the index exactly. Instead, it tracks a proprietary Fidelity Index. The result? You still get exposure to many of the top-performing large companies, but with even less cost drag. Over decades, saving even 0.5% in fees can mean hundreds of thousands of dollars more in your pocket. And with FNILX, you're saving from day one. This fund is perfect for cost-conscious investors who want maximum efficiency. Large-cap stocks bring a balance of stability and growth, which is why they form the core of most wealthy investors' portfolios. The zero-fee structure is especially powerful if you're reinvesting dividends and letting compounding work for 20, 30, or even 40 years. Fidelity launched this as part of its Zero Funds lineup to attract long-term investors, and it's been hugely successful. If you start with $100K here and let it ride for decades, even a small difference in fees compared to other funds could mean retiring with an extra vacation home or millions in your account. It's one of those investments that's almost impossible to argue against. Low risk, broad exposure, and literally no cost. For building generational wealth, FNILX is a hidden weapon many investors overlook. Fund 4, Fidelity Zero International Index Fund, FZILX. While U.S. markets are powerful, putting all your money in one country means you're missing out on the other half of the world's opportunities. That's where FZILX comes in. This fund gives you exposure to large and mid-sized companies outside the United States. Think global giants like Nestlé, Toyota, Samsung, and Unilever. These are companies that dominate their industries, but because they're based internationally, you won't find them in most U.S. focused index funds. The beauty of FZILX is twofold. First, it's completely fee-free with a 0.00% expense ratio, just like FNILX. Second, it gives you diversification across dozens of countries, which means your wealth isn't tied only to America's economic ups and downs. Over the last few decades, there have been times when international markets have outperformed the U.S., and having exposure here helps capture those gains. Currency differences can also work in your favor, as strong foreign economies and currencies boost returns when converted back to U.S. dollars. Imagine your 100K portfolio benefiting not just from Apple's success, but also from a European tech leader or an Asian manufacturing powerhouse. FZILX allows you to own all of that without having to research each country individually. Another overlooked benefit: international companies often have higher dividend yields than U.S. companies, meaning more reinvested cash, fueling your compounding machine. This fund is your ticket to global participation, ensuring that if another economic superpower rises in the next 20 years, your portfolio will rise with it. Fund 5, Fidelity U.S. Bond Index Fund, FSKAX. Now, no matter how aggressive your growth strategy is, having a foundation of stability is key, and that's where FXNAX comes in. This fund tracks the Bloomberg U.S. Aggregate Bond Index, giving you exposure to thousands of high-quality bonds, including U.S. Treasuries, mortgage-backed securities, and corporate bonds. Why does this matter? Because when the stock market takes a hit, and it will, bonds tend to hold their value or even rise. They act as a cushion, reducing the volatility of your overall portfolio. FXNAX isn't about making huge gains. It's about protecting what you've built so you can survive market downturns without panicking. The expense ratio is a tiny 0.025%, meaning your safety net doesn't come at a high cost. Over decades, this small bond allocation can make the difference between staying invested during a crash or selling out in fear and missing the recovery. Think of it as the shock absorber for your wealth-building vehicle. When stocks soar, bonds may not keep pace, but when stocks crash, bonds can help you sleep at night. A 100K portfolio split across our 5 funds with a slice in FXNAX gives you the best of both worlds. Aggressive growth with a built-in parachute. Legendary investors like Ray Dalio and Jack Bogle have always emphasized that a balanced portfolio wins in the long run, and FXNAX helps you achieve exactly that. So here's the big picture. 100K is not a fortune by itself, but when you put it into the right vehicles and give it the right amount of time, it becomes the seed for a multi-million-dollar future. The 5 Fidelity Index Funds we just talked about, FXAIX, FSKAX, FNILX, FZILX, and FXNAX, aren't just random picks. Together, they give you exposure to the biggest U.S. companies, the entire U.S. market, international giants, and a strong layer of protection through bonds. That's growth, diversification, and stability all in one. But here's the truth most people ignore. The magic doesn't happen overnight. The magic happens in the background, quietly, year after year, as compounding works in your favor. Too many investors jump in and out, chasing quick wins, and in doing so, they destroy decades of potential growth. Don't be that person. Be the investor who understands that time in the market always beats timing the market. If you start today, and you stay consistent, reinvesting dividends, ignoring short-term noise, and letting the market do what it's done for over a century, that 100K could turn into 1 million, 2 million, or more. And the best part? You won't be doing it through luck. You'll be doing it through discipline, patience, and smart asset allocation. So here's your action step. Don't just watch videos and get inspired. Take what you've learned and put it into motion. Open that investment account. Research these funds and start building the portfolio that future you will thank you for. Because the choice is simple. Either your money works for you, or you work for money forever. Which future do you want?